Sometimes you get stopped out at break even, and it just happened here. However, one thing is for sure: to know when to move the stop loss to break even and to know where to move it is a fundamental skill for winning more trades. This trade gave us the opportunity to discuss about it, so let's go back to the beginning and see what happened. Today we are looking at a setup on Ethereum US dollar on the 15 minutes time frame. We are using the Breakout Pivotal Bars indicator, the sentiment index indicator down here, and the levels and zones indicator as well, which is going to be used as an extra confirmation. So the setup is going to be built with the Breakout Pivotal Bars and the sentiment index, and the levels and zones is only for extra confirmation. If you want to test the indicators yourself, you find the link in the description down below. So what's going on here is that we have a very nice downtrend, and we also had recently quite a few consolidation and breakdowns, just like the one that we are looking right now. We had one here, so this was an impulsive movement. This was an impulsive movement to the downside, then a consolidation here, and then another impulsive movement to the downside, and then another consolidation here, you see, and then another. Okay, let me draw this, that's better. Okay, so the consolidation is about here, like this, and then this is not really precise. I mean, for the sake of speed, I'm just drawing not precisely, but you get the idea. And then what we have here is well, another impulse here, and this is the one that we are looking for, and a consolidation here. So I cannot place it here, but let's see. Okay, so the consolidation is approximately here, okay, and here, okay, and the same as well above. Okay, so this is the consolidation that's going on right now. What we are looking for is a breakdown of this consolidation, just like happened here, just like happened here, and just like happened in the past. So the second requirement that we have is that the sentiment index, in this case the bearish sentiment index, so the one in red, which is now increasing, which means that the bearish sentiment is squeezing towards the zero line. So the bearish sentiment either will turn into bullish sentiment, so the price will move back up, and in such case I will not be interested in the trade, because I'm not looking for a trend reversal. I'm looking for a trend continuation in this kind of impulsive movements, consolidation, impulsive movement, consolidation, impulsive movement, consolidation, another impulsive movement. So in order to be a valid impulsive movement, the next one, we need a breakdown here, but also a breakdown of the sentiment. And if it is now squeezing towards the zero line, you understand that it has less and less room to go. So at a given moment here in the future, it must break either down, and if the same applies to the price action, so we have a breakdown of this consolidation, then we have a setup. If it does not, so it moves up, then we don't have a setup. It's very simple. It's very simple. The interesting thing here is that we also have the levels and zones, which we are using for extra confirmation, which currently forms our resistance. So if we have a breakdown, we also have a resistance just above our breakdown, which is a further addition to the fact that this should be a trend continuation to the downside. So let's see what happens. Okay, it didn't take much longer, just 2 candles and we got the breakdown. So this is a valid breakdown because the price broke down with a red candle, which is colored by the breakout pivotal bars. In a downtrend, in a breakdown, we want the candle to be red. The sentiment index broke down as well at the same time, and we want it to break down at the same time on the same candle, and it did. And we also are just below a resistance line, so we can set our sell order. So I will set the sell order right here, just at the same level of the close of the candle. And let's see where we can place the target. So I will project the previous impulse to the downside. Okay, so this is the previous impulse. Let's see where we end up. So the target should be approximately here. See? Okay. And regarding the stop loss, I will be using the resistance line. So since we have this resistance, it's a very great indication that the price should not bounce back here. At least maybe I can stay a bit higher than this, so that this resistance will protect our trade, will protect the price from falling back and hitting the stop loss. Because when we have this kind of impulsive movement to the downside, and considering the fact that this is the 1, 2, 3, the fourth impulse to the downside, we should expect that the price will just continue to go down without even moving too much into this area. But for the sake of safety, we just keep we use the levels and zone as a reference, and we just keep our stop loss just a bit above. But unfortunately, I see that the risk ratio like this is about 1.7, which is below the 2x, which I'm looking for when I trade. So let's see what I can do. So the stop loss, I won't be moving down the stop loss, because if I move the stop loss down, of course the risk reward will increase, but then it means that I'm assuming too much risk, because the price could still potentially at least retest this resistance line. So I want to keep the stop loss here. What I can do is maybe move the target a little bit down, and I'll explain why. So let's see. If I can move the target a little bit to here, okay, so that I'm above 2. Why I'm taking this risk? Well, it's simple, because it's the fourth impulsive movement. We are in a clear downtrend. This support line was broke to the downside. This support line just turned into our resistance. So I'm expecting the price to keep falling and falling beyond the length of the last impulse. It's just a very straight down downtrend. So it is very likely that the price will continue beyond this this projected impulse. Of course, if you want to be technically correct, we should keep it at this level. We can assume a bit more risk. And how do we balance out this risk? Well, by moving the stop loss to break even, and then as the price goes down, I will be tracking the price down by moving the break even, my break-even level down and down, so that I will protect my trade, and in the worst case scenario I will not be losing money. Of course, if the price the trade starts and then the price goes back up, I will of course take the stop loss, but I'm not expecting, considering the macro view that's going on with the price action right here. So let's just wait and see what happens. So the price moved a little bit down, more than halfway into the target, and then retraced to this level here. So what I did, it was to move my stop loss to break even. So I have a break even right now, which is around here. So let's see if I can do it. Okay, so which is around here, so that if the price goes down to target, I'm out, and if the price goes back up to this level, I'm out as well, but I will not lose any money. I will actually make even a small amount, but I'm still making some money. So I'm right now I'm in a risk-free trade, and I'll just wait and see what happens. In the worst case scenario, I don't lose any money, so it's okay. I'm out of the trade. Well, unfortunately, it hit my break-even point. Not this one, but this one. What I did was, well, the first break-even point was this one, and it barely hit it at this point here. So the trade continued, it moved down and down and down, and while it was going straight to target here on this candle, I moved the break-even level down to this level here, which was a resistance level as the price went down. Unfortunately, the candle then went straight up and hit my break-even point. So the new break-even level was this one. Okay, so I'm now out of the trade, unfortunately, because I still expect the price to go down, but it's okay. We are out, and in the end we made money. It was a zero. I just checked, it was a 0.8 return, so it's less than 1, meaning that in the end we assumed more risk. We took more risk than the reward, but we couldn't predict that before. I just decided to play it safe and move the break-even point down. I usually do this so that I'm always preventing myself from losing money, which is the first rule that you should always have. First rule, don't lose any money. So keep it safe. Also, always trade the most likely opportunities, so the ones that are most clear, and in this case it was absolutely clear that the price was going down, because we had 1, we had 2, we had 3 impulses with 1, 2 and 3 consolidations. So we are in a clear downtrend. We had the exactly same setup here, and now here. So the price is going down, and I'm still expecting the price to move lower from this level, but as I explained, I just decided to play it safe and move the break-even level here, and now I'm out of the trade. Am I concerned? Absolutely not, because in the end I was profitable, and that's the most important thing. So once in a while a situation like this happen, you don't have to do anything about them. I mean, you have to just accept this situation. As long as you are profitable, they are still a good situation to be in. So I hope you guys enjoyed the video. If you did, be sure to like it below. If you didn't already, subscribe as well. And if you have any comment, feel free to leave it down. Thank you for watching, and see you in the next one.